It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, August the 9th, 2016. Cruising our way through this second full week of the 8th month of the year. Boy, it's been a great month of August so far. Hope you guys are having a great week with me. We are still trading the reaction to last Friday's non-farm payroll report. And this evening, we have crude oil and the S&P both looking for range rotation back to the highs, while gold and euro are now digging into significant resistance levels that were created last Friday. Boy, lots of opportunities tomorrow. No matter what happens, though, we are expecting some big trading opportunities, and we're looking forward to another great session with you guys tomorrow. Have another great newsletter for you tonight. Plenty of reliable trades setting up for tomorrow. But before we get into those charts and start putting the plan together, I want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Join me here on the blog at Sideways Markets for the full-length version with all four markets and all the analysis included. While you're here watching the full-length version, don't forget, I got a free pass for you. If you're not a member here at School of Trade, I got a free pass for you to come out and test drive the live trade room with me here as a guest. In the lower left-hand corner, don't forget to join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. And of course, please remember you can download all the charts you see me using in tonight's video. Grab all those charts below the video by following that link on the blog. And as I always remind you, you'll learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. Register as a trial member on the right-hand side of the website. And don't forget, I'm always here to answer your questions. Use my live support button on the right-hand side of the website. And I'm standing by to answer all your questions. Hope you guys are having a great week so far. Before we jump into our charts, so let's make sure we take a look at the calendar for tomorrow. Tomorrow's Wednesday, August 10th. And of course, whenever I talk about a Wednesday, I'm always thinking inventories, right? If you're a crude trader, and if you're an S&P trader right now, the S&P has been kind of the shadow of crude oil over the past 7.5, 8 months. And so we know tomorrow is also expected to be a big impact player for the S&P 500. First things first, though, Tuesday, August the 9th comes to a close in just a few hours. We have no major news coming out of Asia. Get some minor reports there from Japan, but I'm not expecting to see very much. At least I'm not expecting to see that move the markets very much here in the overnight session. So nothing to worry about there tonight. Tomorrow, as you can see here, it's a pretty quiet session tomorrow in London. We get some minor news coming out before London opens up. Don't forget, London opens up at 3 a.m. Eastern time. And of course, nothing to worry about there. And it looks like all the big news is tomorrow from the JOLTS report and of course the petroleum status report. We get some Treasury budget at 2 p.m. Eastern time, and of course a relatively minor announcement right from the Royal Bank of New Zealand tomorrow evening at 5 p.m. Eastern time. It looks like though the meat and potatoes are going to be all here based in the U.S. morning and early afternoon session. Don't forget the JOLTS report, the job openings, layoffs, and transfer survey. It's my gal Yellen's favorite report. According to her, this is the best, most accurate impact on the jobs economy right now. So that'll be at 10 a.m. tomorrow morning. And then don't forget, you get the petroleum status report. Remember, this is not your average news report. And again, don't forget, it's not just for crude anymore. The S&P 500 is expected to at least see a blip on the radar tomorrow. It really all depends how crude reacts to it. What I always remind you guys every Wednesday is to give it at least 15 minutes before the news comes out, and then at least 10 minutes after the news comes out, right? So 10:30 is the news report. 10:15 is going to be the cutoff for us. A lot of traders don't even trade after 10 a.m. on Wednesdays. I'll go a little bit later until 10:15, but that's about as far as I'll push it because you get a lot of gamblers, a lot of aggressive traders jockeying for position around there. It becomes a very violent environment as we go into the news. So give it some time ahead of it and give it some time afterwards, and then you'll look for that trend and follow the plan right after we finish up with the news tomorrow at 10:40. All right, so give it 15 minutes before, at least 10 minutes after. And like I always say, when it comes to big news reports, be careful. Right? Be careful. It is not a good idea to gamble away your profit, gamble away your hard-earned capital by trying to trade the excessive volatility that comes into a news report. So If you ask my opinion, don't even try to trade the news. Wait for the news to come and go. Wait for it to calm down a little bit after 1040. Then find the trend direction. Set up your analysis, because usually what happens is after the news comes out at 10:30, it usually goes all over the place. So take some time, set up your charts again. We'll do it with all of our students tomorrow morning inside of our trade room. Don't forget, tomorrow morning we'll be in our chat room tomorrow morning at 3 a.m. Eastern Time with all of our London-based traders. You'll be with me tomorrow in the trade room for the U.S. session at 8 a.m. And of course, we'll be trading live in real time with all of our students, the JOLTS report, the petroleum status report, and then again back in the chat room this tomorrow afternoon for the Treasury budget. You got the schedule for tomorrow. 9 of the plan for tomorrow. Be ready for that news. And again, 10 o'clock, 10:30, and then 2 p.m. Eastern Time tomorrow. Let's keep going. We got some plans here tonight for crude oil, S&P, gold, and euro. Crude oil is bearish and trading at the lows of today's range. Sellers have control and will be looking for failures above the moving average or a strong breakout pullback below the double down at 42.46. Buyers may look at this as a large trading range and go hunting for the highs again tomorrow, but they will need to get above that moving average and hold the pullback before they can be confident. Right now, it's a bear market. If the buyers want anything to do with this market, they've got to get a new higher high and hold the pullback to get any confidence and any reliability going higher. Also, if you look at the bigger picture, you can also easily see the potential for this is just being a big trading range with a bull bias, which tells us that a break lower will most likely be seen as a gorgeous buying opportunity for long-term bulls with a target back to the highs. So sellers need to be careful trying to sell into the lows tomorrow. You know, in all reality, I could easily see this market spiking lower, finishing that double down, digging into this, what we assume to be a very enticing buying area here for long-term buyers, and then finishing the move back up. Now, how do we trade something like that? That's going to be, right, that'll be the big question here going into tomorrow. First of all, if you're going to be a buyer right now, we've got this long-term trend going lower. Watch a couple things here. Watch the high of the channel. Watch the rising trend line, which was broken but closed back above after this afternoon's news, and then watch the moving average. What you're looking for as a buyer right now is a breakout, pullback, using those areas as support. Boy, wouldn't that be just delightful if we could get them all lined up there together. I hope we get that, right? It's unlikely, but that will be the ideal scenario. And of course, with that breakout pullback for the bulls, you get your short-term target up around 43, and then long-term target will be, I'm going to say 43.40, but you know, ultimately they're trying to get up to that high of day at 43.52. 43.40 is the high of that trading range. And of course, that is the ultimate objective here tomorrow for those bulls, right? And if it just gives us a nice breakout pullback now for the bulls, that of course will be the short-term target. If it does go lower though for the bulls, right? If it does go lower here for the bulls, this is where, again, we talked about this last night. We have to assume that in a bull market, let's draw it up. We have to assume that in a bull market that's trading inside of a range like this, right? And so now we went back down to the low of that range. We have to assume that long-term swing buyers who have earned the right with a large account, right? They're going to buy a little bit here. They'll buy a little more here. They'll buy a little more here, knowing that eventually, right? And again, think of these as areas of support here, right? Eventually what will happen is this market will eventually go back up to those highs. The odds are significantly stacked in favor of the long-term buyers right now, and until something dramatically changes, right, the sellers have to be aware of that, right? So with that said, as this market pulls back, right, we're here right there, right? We're right now at the low of that range. Long-term buyers can just stack on the orders as this thing is pulling back. Short-term buyers, though, have to be a little more careful. What you really want to wait for as a short-term buyer is wait for it to make the turn and then get in as it makes that turn and as it holds that pullback, right? So whereas the long-term buyers can be aggressive with it, it's not really that aggressive for them. They're risking 0.001% of a big account. They can scale into this, right? For all of us day traders out there, we're not scaling in as a day trader, right? If you want to be a swing trader, be a swing trader. But if you want to be a day trader, though, you really got to wait for that move to make that turn, hold that, right? And that's where the short-term buyers will have a much higher reliability on the way back higher. So, again, where that will happen, I don't know, right? We don't know where that will happen yet. As this thing pulls back, again, I would expect buyers to try to buy here, and buy here, but we don't know which one's going to turn the corner here. So let's say it even goes lower, right? It goes all the way down today. Again, it'll be a bearish day today, we'll talk about in a second, but then you want to wait for those, right, that turn, and then you can start being, again, a short-term buyer, right? Long-term buyers will buy the low, they'll buy the swing, right? Knowing that the odds are high, it goes back to those highs. Short-term buyers, though, don't have the luxury of doing that. They got to wait for that turn before they go back up, right, and start buying again. So as this price goes lower, if you want to be a buyer right now, as this price goes lower, we really don't want to just try to buy it, right? Because it's a bear market and it can easily keep going lower, right? What's that old saying? The market can remain irrational longer than I can remain solvent, right? Remember that old saying back in the old trading books? That is very much accurate right now. So just because we expect to see buyers entering the market doesn't mean it's a reliable trade just to buy the low. It's still a bear market. And how do we turn a bear market to a bull market? Selling it off. There's your turn, right? And that's what you'll be looking for, right, for the short-term buyers. All right, guys? Again, that'll be the most reliable way to do it. Another kind of more aggressive way to do it would be to buy the low of this channel with a double overshoot. One overshoot, two overshoots. Again, I am not saying that's a reliable trade. I'm just saying that's another aggressive way to do it. It's a little bit more reliable than just blindly buying 42.90. Makes sense? A double overshoot expected to overcorrect back up to the high of that bear channel. So if you're a buyer, get above that moving average, hold that pullback, and then again, depending on where it happens, either it's here, right, or it ends up being right there. Again, we don't know where it's going to be yet, but we do know tomorrow will be an opportunity for the bulls just as much as it is for the bears. What if you're a bear right now? Well, if you're a bear, the odds are in your favor right now. So if we go higher here, the bears, now heads up on this trend line here, because this trend line's probably going to wreak some havoc tomorrow for the bears. Assume that trend line wasn't there. Right? If the trend line wasn't there, the bears will just simply look for the buyers to try to hold the pullback and fail, and they'll keep selling it. They get a beautiful battle zone overhead. Again, up top, buyer failure, sell it back down. So buyer failure, as this price tries to go higher, buyers got to hold the pullback, right? Well, what if they fail? Right? If they fail, this is a bear market. If they fail, the bears will sell until this becomes a bull market. In a bear market, we sell all buyer failures unless there's support in the way, and that's where we have to worry about this trend line tomorrow. Again, like I said, they definitely busted through it, but it happened on news this afternoon, and of course it's closed right back up in. So you can almost look at these two candles right here and just kind of ignore them. Right? They're almost not even existent because spike down for the news, right back up where it came from, just kind of ignore them. They're there, but they really don't matter very much. Trend line is still intact, sitting on top of that measured move right now. Now, we talk about going higher, right? If the buyers fail going higher, that trend line. So what you want to look for that trend line is as this price goes up, break out, pull back, right? And use that trend line as not support, but now use it as resistance. The hard part's going to be if this price goes lower. Honestly, it gives me a little bit of indigestion just thinking about trying to sell this thing as it goes lower. First of all, if it goes lower right now, you're trying to sell the low of that range. So you have to remember it's going to be a very rocky road going lower. What you really want to see is you want to see a real strong move lower and then hold that pullback from there. I'm talking big, strong push. What you really need is, with that strong push, you have to make the buyers think twice before they buy here. That's what's going to be needed tomorrow if you want to be a bear selling that low. right? So for example, you want to see a strong push, there's a strong push right there, right? Large, strong, closing at their lows, consecutive red candles.